Hey, Bulls and Bears, what is happening? We are back with another dose of economic reality. It is Friday, Good Friday, and happy Good Friday to those that celebrate the holiday Good Friday with Easter around the corner here. We're going to integrate a little bit of holiday talk, a little bit of financial talk into our report today. And let's start with it right here. This is out of Axios. Potatoes sprout as cheaper Easter egg substitute. I had joked about this back in the fall. I said, wow, it's going to be an expensive Easter this coming spring because of the cost of eggs. And now I saw this article, I had to laugh. At first, I was like, they're joking, right? Painting potatoes instead of eggs. With egg prices still high, the potato industry is looking to scramble up Easter. Ha, get it, scramble up. Traditions with a budget friendly alternative to Easter. And that's going to be Easter potatoes. Potato producers are taking advantage of the fact that the price of eggs went up 55% compared to a year earlier. And the price of potatoes only up 13.5% year over year. I'll tell you, the farmers up in Idaho are celebrating right now. Sometimes I think about these holidays and the traditions, and I just kind of laugh. Like, what a weird thing is to tell kids that there's a magic bunny that's going to come around and drop off some eggs. On that note, Christmas is kind of weird. The big guy in the red suit. Just a lot of things are weird what we tell our kids. And I guess it's kind of the same as the economy. You know, people that believe the economy is strong still, they believe the talking heads out there. They're more likely to believe in maybe the Easter Bunny or the Santa Claus and the Tooth Fairy and all the above. All right, but let's get into some other news here. By the way, I'm a little bit under the weather. You might see my eyes are a little bit red today. And that's one thing about being a kind of a fair-skinned individual is when I'm sick, you can very easily tell. And actually, I've got this weird thing growing here. I know some of you will make fun of me for that. It's this zit. And I think I was too old. I thought I was too old for acne, but I got this weird thing. Hoping that's all it is. I'm hoping it's not some sort of skin cancer. All right, but let's get down to some other news here. U.S. jobs report. The economy adds 236,000 jobs in March. Is that going to match the jobs loss number? Remember, about every week, the new unemployment filings is in the 200,000s as well. So it looks like the economy is treading water when you look at that particular metric. But don't be so quick to think that everything's fine. The labor force participation rate is actually worse than what it was 1 year ago, but you're not really hearing that reported too much on the news. All right, the labor force participation rate. So I've got a chart here. The number of people not in the labor force is clearly higher than what it was 1 year ago. All right, but you're supposed to believe that everything's fine, that nothing's wrong. You're also supposed to believe that the bank crisis, the contagion, has been stopped based on the backstop that supposedly is a backstop. Now, if you listen to what Janet Yellen said, she never guaranteed that all banks would be backstopped or that all depositors would be backstopped. So basically, she caused even a worse bank run. And that's why in the second week after the banking crisis, after the collapse of a couple big banks here, a few big banks, we saw outflows, people taking the money out of those banks. Those outflows increased the second week. And the third week also was a high number. We'll have to get the exact number for you. But the crisis has not slowed down or dwindled. In fact, it's looking to have gotten worse. People are panicking even more after hearing the not so reassuring words from Janet Yellen saying, well, we all have to agree that we're going to backstop certain depositors at certain banks because if the banks aren't big enough, if they're not systemically important, then we may not backstop them. We're going to have to decide. So that's not a very confident inducing series of words for her to say, to stop the banking crisis. If she really wanted to stop the banking crisis, all she would have to do is saying, yes, we're going to backstop all deposits. And I'm not saying that's a good thing or a bad thing, because ultimately it's going to be you and me, the taxpayer, is going to be on the hook for paying for all this. But if she really wanted to stop the panic, that's what she would have had to say. And she did not say that. So a lot of people are leading in the direction and to the conclusion that this is a something done on purpose, that this is a purposeful taking down of many of the smaller and regional banks in order to consolidate more business and more power with the mega banks, right? A lot of people are saying that, and Of course, the powers that be are not going to come out and say, yeah, this is our plan, this is what we're doing. But a lot of people are connecting the dots and coming up to that conclusion. I don't know. If I don't have proof or a source, telling me that, I can't really say that that's what's happening. But I can tell you a lot of people I see talking in different areas, and even in comments on social media are coming up to that conclusion. So what do you think about that? Please let me know what you think down in comments. Goldman Sachs is out there saying U.S. homebuyers likely to see modest impact from banking crisis. Just a modest impact. So what does Goldman Sachs mean by that? If higher mortgage rates and tighter lending standards weren't the dagger for prospective homebuyers, then the recent bank failures would seem to have added a new obstacle to closing deals. But according to strategists at Goldman Sachs, the impacts of the residential housing market for these events are likely to be modest for potential home buyers. So it's not just rising mortgage rates. The question is, are we going to have this credit crunch, right? Is the banking crisis going to have banks being more cautious on who they loan money to? Therefore, it's going to be harder to get a home loan, and the demand is going to go down for housing, and therefore prices will go down even faster for housing. Among the factors in residential real estate market from the crisis worst impacts is that mortgage lending is less sensitive to bank balance sheet pressures compared to other forms of lending. Only 18% of mortgages sit whole on balance sheets, while nearly 70% of outstanding mortgages are stripped of credit risk and securitized into mortgage-backed securities, the market where the mortgages are held and traded by investors. Well, we're going to have to see if the biggest trader of all, biggest investor of all, the money printers, could come in and buy these mortgages and therefore keep the lending going, so to speak. Because if the banks know that they're going to have a buyer at the end of the day, the buyer and lender of last resort, the money printer, then they can go ahead and continue to make loans, even though they know that people don't make enough money to repay these bubble mortgages for these high home prices. So we'll have to see. In a controlled market, it's really hard to predict what's going to happen. If it was a free market, you could very easily tell what was going to happen. You could say home prices are too high, incomes are too low. It has to be a major crash or correction, but it's not that simple when you have someone out there picking the winners and the losers, someone out there rescuing the banks, someone buying toxic assets, including mortgages that have really lost value. If you're holding a mortgage that you gave out a loan on at 3.5% or 2.9%, some of these really low ones, and now the value of those securities sitting on their books, has really dropped now because the rates are so much higher. Right, more signs of distress. Tesla cutting vehicle prices once again. This is the fifth time since just January. So here, just a few months, the fifth time since Tesla has had these significant price cuts. It's at least $1,000, and some of these other models are up to $5,000 price cuts for the Model X. Right. So what's going on? What does the CEO see on the horizon to where they're making such drastic and large price cuts on their vehicles? I think they see a storm coming, and it's not just that. We've got JPMorgan out there, another vague assessment of the economy from JPMorgan. Quote, there's storm clouds ahead for the economy, JPMorgan CEO says. Also, some people out there think that I exaggerate, that the economy is actually really good, and then I'm just cherry picking bad news and stories to bring you to paint the narrative that the economy is not doing very good. Well, here's an article right here that I think underpins how truly bad things have gotten, and how much worse they could go going forward here. CNBC, layoffs are up nearly fivefold. Layoffs are up nearly fivefold this year, with tech companies leading the way, of course. And there's a lot more planned layoffs. We just talked just this week, big announcements out of McDonald's, big announcements out of, what was the one from yesterday? Walmart executive jobs being cut. We know what's happening with Amazon and other big retailers, including on e-commerce, online retailers. So things are not looking like they're going to be turning around very soon. And like I said, we're just in the early innings. I try to remind people of that because people somehow think that things are just going to change or reverse. But nothing's being done to really change or reverse the course that this economy is headed on, right? So we have more bank failures ahead. So be careful where you keep your money. Be cautious. I'm going to wrap this one up here so I can kind of maybe get a little rest today. Still not feeling too good. I've sneezed like 4 times this morning already. Usually I don't sneeze, but if I do, it's usually just one. Today was 4 sneezes, so that's a sign I'm gonna go take some vitamins and try to rest today. So hope everybody's well. Keep stacking, everybody. Bye for now.